As we continue to pay attention to the draft auction calendar, this message first goes to the team at Ministry of Finance, the team at Bank of Uganda. I know you release the draft auction calendar as one way to get feedback from investors, and a growing number of retail investors have something they want to say. The budget is good. We have big wins in the budget. We are happy with them. The fact that you are bringing back the 25-year bond, of course, we were expecting it. And the fact that it's one of the bonds that are going to take a big share of the auction in this financial year, that gives so many people to start investing in that long-term investments, in that long-term 25-year bond on the primary market, to plan ahead for it without worrying about the secondary market or anything close to that. But one other important thing which we need to pay attention to, and it's always good to pay attention to the investors, especially I'm speaking so much from the retail investors, is when do they get paid? It's important. Ladderling is important. Now, majority of us, our investments in a treasury bond, we are out for maximizing profit. We are out there to make sure we earn the most money possible. That's very true. But at the same time, we do also want to make sure we get paid across the year. Across the year. It's extremely important. Now, majority of the investors who are going to invest in 2026, 2027 have potentially been investors in this current financial year, 2025, 2026, that we are about to finalize. And if they have been investors in 2025, 2026, it means they either already have a 25-year bond. That means they will be paid in August and February and soon in January and July. They either have the 20-year bond, which pays the 2043, which pays in January and July. They have the 15-year bond, which pays in January and July. They have the current 10-year bond, the 2035, which pays in May and July, May and November. So when you look at that, that means someone is building a portfolio. You also want to build a portfolio that also gets you to be paid in other months without necessarily relying on the secondary market, which sometimes gets expensive. So the current draft calendar, it has big wins. I love the 25-year bond coming back. I don't think we have enough of it on the primary market, even on the secondary market. That's why it even created the inverted yield curve. So that is a big win. It will increase people getting paid in Feb and August, especially for the people who missed out on the 2029 bond, which was the 5-year bond, or the 2033-year bond, or even the 2031 bond, those bonds that pay in February and August. So for those new people who are just coming in, they're about to get more of the Feb and August and lock those months in. However much, it's going to be just for 5 years. Then they start getting paid in other months of Jan and July. And of course, Jan and July is always the biggest win. Then the most other important thing for me here, which I want to pay attention to, is the 20-year bond and the 15-year bond that you are about to issue as new bonds. Now, those are good bonds. We are looking forward to them. But is it possible to shift one of that auction to September? That the first issuance of either the 15-year bond or the 20-year bond goes to September, and then you bring either the August bond, the 2025 bond, and bring it back in August or July. Why? It allows us to start getting paid in one of those bonds. That means we are buying that bond intentionally for us to be paid in July and in September and March, which is important. We need to start having some payments scattered in those months. It's important. And we need to see it on the primary market. Otherwise, right now where we are, majority of the bonds that pay in those months, so the 15-year bond, the 20-year bond, the current draft calendar is literally making them the 15-year bond to be issued first on 2nd July, which means it will make sure we are getting paid in July and Jan, and then 2 years later it starts paying in June and December. Now, that one I'm okay with it. I'm actually okay with it because we do not have so many bonds that pay us in June and December. And especially the retail investors, they do not have that many bonds that pay in June and December. So getting us a bond that pays us in June and December for laddering purposes, that's okay. However, the 20-year bond, the new issuance, it's planned for July 16th, which means it will be paying us in Jan and July. Which month for the retail investors? And we want to plan for them also. I know the institutional investors, sometimes maybe for them they do not see the perspective of this. But we also ask, as retail investors, it's important. It's important to have something that pays us in March and September. Especially for the people who have just joined the Treasury bonds. I talk about this not for me as me, but for the so many people who have just joined the Treasury bond market, who right now it's important for them to start being paid in other months. I have one of my very good clients. If I mention his name, is be like, yeah. But we were talking yesterday, and he said, Alex, I have 4 months which are so thin for me. That is March, April, September, October. Those are very thin for so many people. And many people are starting to fall in love with this product. And they want to invest more and more. They want to have their perfect laddering for the next 3-4 years. So is it possible to push the September, the 20-year bond issuance for the first time to September? I know you can work it around. And it comes in September for us to be paid in March and September. It's important. Help us to plan. Help us to plan. Help us to help our clients also to plan better, to have better decisions they must make in this investment. That is important. Then I love that you are bringing back the 10-year bond, the 2037. It's a good bond. It's an amazing bond. It has a 16% coupon rate. It pays in May and November, the same way as the current 10-year bond. Maybe if you cannot move the Jan and July issuance, the Jan and July issuance for the 15-year bond and for the 20-year bond, is it possible to introduce a full new year 10-year bond? But making sure the first issuance is in September or in October. I know it might not work so much within your parameters of issuances, but it will. Sometimes you have to meet us halfway. We want to continue encouraging people to invest and buy these bonds, but meet us halfway. Meet us halfway that allows us to also get something on in our ladders that allows us to plan better. Of course, for all other intents, a bond that pays in May and November is a very good bond. In this calendar, you are bringing in the 2-year bond. It has a 10% withholding tax. It pays in July, in May and November. That 2-year bond is one of my biggest shockers. I could not think that the government is trying to bring in a 2-year bond, to reintroduce a 2-year bond with the 10% withholding tax. It's hard to believe, but it's happening. It excites me because that's an opportunity to make money. So I'm okay with it. I'm not complaining. I'm getting shocked. Sometimes you want also the government to make tax, to make the taxes, and the people who are investing for 2 years, getting a 10% withholding tax, it's tricky. However, I must warn the investors that 2-year bond, you will pay premium. One, it has a 15.25% coupon rate. And that bond right now is trading at a yield of 13%. Do not be shocked when you end up paying a 20% premium to just acquire that bond. Maybe to the government, they have analyzed that, you know what, we might get a premium, we might lose on taxes, but we might get payment on a premium and we might access money early now. I'm okay with it. I'm all for strategic decision making that makes sure we are in a win-win situation. But we have that bond. Then we have the 5-year bond, the 2032 bond. It has a 15% coupon rate. It also pays in May and in November. Now, I do not want to have 5 bonds paying me in May and November. Of course, I'm going to be paid many more, a lot of money in November, almost every single week. But we also know many times there is not so much of an auction in December. So that means for planning or strategic purposes, almost all the money I sometimes get in November, I either have to send it to a money market fund or it has to sit on an account for a full month plus when it's not earning. Help me. Help us. I can plan better, but I'm speaking so much on so many of my clients who are in this dilemma, who find themselves in this dilemma. You know? So how do you help us in this situation? How do you help us in this situation? So one of the things that is extremely important and which I want us to focus on is to say, which bonds, how do we find common ground? We do not want to crowd out the Jan and July and the May and November. Throw us a bond at least in August. We have the 25-year bond. We are happy with that. Throw us a bond in September and March. That to the extent possible that so many people end up even wanting to look for that bond and they cannot even get it on the secondary market. Bonds that pay in March, in July, in March and September. The institutional investors that hold those bonds for 3, 4, 5 years ago when they acquired them, they are not selling them. So how do you help us? Meet us halfway. Meet us halfway in a way that allows us to make money but also allow you to also meet your obligations. It's my humble request, my humble submission. However, if the calendar might change, it might change. I expect it's a draft calendar. If the 2-year bond remains as is, that's a big win. We thank you. If the 5-year bond remains as is, that's a big win. 10% withholding tax on a 5-year bond, that's very, very good. I would want to buy a 5-year bond because if I look at it, that means that bond matures when we are about to exit the election, the next election cycle, and take advantage of the interest rates at the time. I'm surprised it wasn't the 2031. I would have expected you might issue a new bond for 2031, but that is it. The 10-year bond that is being brought back, the 2037, is a very good bond. It has a 16% coupon rate. People will love it. People who have been used to the current 10-year bond which has 16.25% will love the 16%. The difference is very, very immaterial, and it gives them planning and investments and laddering of their principal repayment without so much concentration. The 25-year bond coming back on the market is very, very good, and the fact that it's one of the bonds that are going to be issued in almost 4 times compared to, actually there are 5 issuances compared to the 3 issuances last year. That makes us a good investment. The 20-year bond and the 15-year bond, it's where I believe you have a little bit of flexibility. Please help us. Give us something. Give us something. It's a good bond. It's an amazing bond. Those are 2 amazing issuances. Give us something. Throw us a bond in September and in March. We really want something. We want to ladder. We want our perfect ladder for reasons we have clearly stated down.